Let's talk about which share trading platforms are good options if you're an investor in Australia. Some platforms are better suited for different investors and how much money you have to invest. Also, this video is not sponsored. I wanted to keep this completely unbiased, especially when discussing things like trading platforms, but these are still my opinions, so make sure you do your own research and choose your own trading platform. Because after all, it's your money. Okay, let's get into the topic. When you're choosing a trading platform, you should go in with the idea that eventually you're going to have a sizable amount to invest. Start with the end goal in mind and choose how you mean to go on. Now, in this video, I'll only be discussing CHESS-sponsored trading platforms. Trading platforms can either be CHESS-sponsored or custodial. CHESS-sponsored means that the shares that you buy are in your name, you get a holder identification number, and you are the registered owner of those shares. With a custodial trading platform, they buy the shares, and even though they are still yours, the registered owner is the trading platform. Most of the time, this isn't a problem. We have pretty good regulation, especially when it comes to financial products within Australia, and trading companies especially are under strict ASIC rules. However, if something happens with that trading platform, that's when things aren't quite so simple. Now, it's unlikely that anything bad will happen, but unlikely isn't enough peace of mind for me. Also, when you buy shares through a CHESS-sponsored platform, that's where you get to use your HIN, your holder identification number. You can switch platforms anytime you like. There usually is a lot of paperwork still, but it's not that complicated. But with custodial trading platforms, it's a little bit more tricky. Now, most of them do have policies in place where you can just fill in a bunch of paperwork and transfer your shares to a different platform. But some of the smaller ones means you might have to just sell your shares through that platform and buy them at a new one if you wanted to change. So switching brokerage can be a little bit more tricky with a custodial platform. Now, I don't think custodial trading platforms are bad at all. You actually get really low fees with them, which is why people like them. They just don't offer the same protection as a CHESS-sponsored platform. But anyway, start how you mean to end. So let's go over the bunch of companies that I looked at. Now, a lot of these trading platforms are pretty similar actually. Buying and selling shares is pretty straightforward on most of them. It's just the fees, where you're supposed to put your investment money, things like that are different. And of course, a lot of them have a different interface. Some are prettier than others, if that's important to you. Now, before I get into analyzing each different trading platform, what should you be looking for in terms of deciding which trading platform to go with? The three main things that you should be looking at is 1, fees. This is not only trading fees, some of them have subscription fees, some of them have an inactivity fee. So if you don't invest within a year, you start getting charged. There are also foreign currency exchange rate fees. So it's not just trading fees that you want to be looking at. The second thing you want to look at is how easy is it to use? How easy is it to get your money in and out of? How easy is it to make a trade? How easy is it to find information on the stocks that you're interested in? And the third one is how reputable, how established, how much stability does that trading platform have? Now, all of them have to be regulated and licensed, otherwise they can't trade in Australia. But some of them don't have the best customer service, and some of them are just a little bit less established. So let's get into the companies. Let's start with Stake. So Stake is popular because it has really low trading fees. It's $3 for trades up to 30,000 and then 0.01% over 30K. There's no ongoing fees, although they do add an extra fee for foreign transactions. You can buy Australian stocks, you can buy ETFs, and you can buy US shares, but they don't deal with any other foreign exchanges. They don't have the best research tools, so if you went with them, you might have to do your research elsewhere. This is a very low frills trading platform. It's cheap for trading fees, and that's its selling point, and that is why it's so popular. Let's move on to CMC Invest. This is a global company, so you're not just trading in Australia. You can trade in 15 other countries if you wanted to. The trading fees under $1,000 are free, but only once per day. And then it's either $11 or 0.1% after that. It's really easy to use. It has good research tools. You can make all of these pretend portfolios to follow if you want to do that, which is really handy if you want to track certain stocks or different portfolios before making a purchase. I think CMC Invest is actually pretty good if you're a small investor and just getting started, and probably for big investors as well, especially in the beginning when you're just putting small amounts in to build up your portfolio. Next is CommSec. It's well established. A lot of professionals use it. I use it. Now, if you're going to go with CommSec, I recommend that you don't trade directly through your bank account, although you can do that. But instead, if you want lower fees, open up an investment account with them. That means if your trade is up to $1,000, it's only a $5 trading fee, $10 up to $3,000, and $20 up to $10,000. If you don't have that investment account with them and you're trading just through your bank account, it's $30 a trade up to $10,000, and then it scales after that. So CommSec is on the higher end of trading fees, but you can pretty much trade all international markets, ETFs, options, whatever you like. They also have really good research tools. You can set up different alerts on different price changes, but because of the high fees, it's not for everyone. So next, let's talk about Perla. Perla is another popular trading platform. It's popular because it has a fixed trade cost of $6.50, no matter what size trade you make. They do have currency conversion fees like most of these companies. You can only trade Australian and US stocks. There is one quirk to Perla though, that you can't see the actual live price of the stock you're interested in until you go to buy that stock, but they are very geared towards beginner investors. They have a lot of info and videos on how to get started, on how to invest. They even have a kids investing section. So they're very strong on education. They also have a micro investing section. I'm going to talk about micro investing in a different video because that's a whole different way to invest. Another reason people like Perla is that they have an auto investing feature, which is actually really good. I might do a video on auto investing later as well. SelfWealth is another really no frills trading platform. The cost per trade is $9.50 up to $50,000, and you can trade internationally and Australian stocks. But other than that, it's pretty low frills. NAB Trade, let's talk about that. Their fees are $9.95 up to $1,000, $14.95 up to $5,000, $19.95 up to $20,000. So NAB Trade is on the high side, as most of the bank trading platforms are, and it doesn't really offer that much more for the cost, but they are stable and consistent. Let's move on to Totality, which used to be CMC Invest or CMC Australia. Because they're an international global company, they have all of the global markets that you can invest in. You can choose whether you want to pay $3 per trade for the custodial method or $14.90 for a CHESS sponsored method, but their international trading is quite low. So if you're interested in global trading, they might be worth a look. It's probably not worth it if you're only interested in Australian stocks. Let's try and get through these last ones really fast. Moomoo has $3 trades up to $10,000, $6 up to $20,000, and $15 trades up to $50,000. And you can invest in Australia, Hong Kong, and the US. There's Webull. They have no fees for ETFs, which is interesting. And they have very, very cheap brokerage. So you can trade Australia, US, Hong Kong, and China. And you can also buy fractional shares, so micro investing. They do kind of have a bad rating on Trustpilot though. I've never used them, so I don't know. Then there's Tiger Brokers. They are very heavily geared towards the US market. Their fee structure changes a lot. I think right now, when I looked, it was free for trades up to $20,000. I think it's been $3 in the past. I think they changed their cost structure quite a lot. You can buy Australian, US, and Hong Kong shares. And lastly, there's eToro. eToro's fees are all quoted in US dollars because it's a US company. They also have an inactivity fee of $10 a month if you haven't traded with them within 12 months. And when I was looking, I think they have both a custodial and a CHESS sponsored option. But yeah, everything's quoted in US dollars, being a US company. So who should you go with? Baby girl, I can't tell you that. This is going to depend very much on what your goals of investing are. I will say stick to the more popular, bigger trading companies. A reliable trading platform is a much better choice than a smaller company that, even though they have low fees, might not be quite as easy to trade through and might not be quite as easy to get your money out of. There are more factors than just the trading fee that you need to consider. This is your money. You want to keep it safe. But good luck. I hope you found this video useful, and I will see you in the next one. Mwah.